think I'd start bigger, faster. I probably wouldn't mess with the duplexes or fourplexes. I think I would just dive straight into the larger multifamily deals. Just again, economies of scale. Really, you're going to deal. You have really the same amount of work on a small deal as you do as a larger one. So yeah, I'd say just start.
Your host, Josh Appleman, founder and CEO of Appleman Properties. Today, we are joined with Anders Jacobson. Anders is the founder of Brighton Capital and is based in Raleigh, North Carolina. Anders made his mark in solar before diving into multifamily real estate in 2017. Inspired by family and the birth of his first child, he focused on creating legacies through financial freedom. Anders, welcome to the podcast. We're excited to have you here. If you could let the listeners know a little bit more about yourself.
Yeah, thanks, Josh. Appreciate it. Excited to be on here. Yeah, quick background about me. I live in Raleigh, North Carolina, with my beautiful wife and two awesome kids. Um, Grew up early on, just a big sports junkie, obsessed with basketball, football, really all sports, but kind of had the goal to play basketball at a collegiate level. And fast forward a little bit to 2011. I was playing college basketball in Virginia at a small college there, and we had an amazing team and ended up winning the national championship. And I was named the MVP of the tournament. And so at that point, kind of all my dreams had come true. I was kind of at this mountaintop and riding this high. And very shortly after, just a few weeks, I get a call from my dad, and he lets me know that they had lost a lot of money during the crash, and they weren't going to be able to help me pay for any of my school anymore. And if I wanted to keep attending the school that I was at, I'd have to pay for it myself. And I was at a private school at the time and had a kind of max athletic scholarship, but it was still expensive after that. And so I didn't know what I was going to do. Kind of was at this low point, and I remember thinking like, I'll never let this happen again. And kind of fought my way out of it, clawed my way out. Luckily, my brother had a connection and ended up working for a door-to-door sales company selling home security systems in Detroit, Michigan that summer to pay my way through school. And by the end of the summer, I was the top rookie salesman and really found a unique skill set for me and changed the path really of my life. I stuck in sales, eventually got in the solar industry, started and scaled two companies and exited both of those. And kind of along the way there, I got married, and me and my wife were in Virginia right after we were married. And I remember thinking we need to, start investing money and really building some wealth. And I put a large chunk of our money in the stock market and in one stock in particular in the solar industry that was the largest company in the world at the time. Everyone was saying it was going to continue to rise, and it ended up going bankrupt, and we
Oh,
lost all
wow.
our money. And I remember just kind of being humiliated and embarrassed, even telling my wife that had happened. And remember thinking, having that same thought, like, I will never let this happen again. And right after that, I started diving into podcasts, books, attending events, really trying to learn from wealthy, smart people in the world. And kind of the one common denominator that I found from diving in was that they all owned multifamily real estate. And so shortly after, we invested in our first deal as limited partners, and then it was kind of off to the races. We tried out everything. So we did fix and flips, single family, multifamily. We did some buy and holds on duplexes, fourplexes. We did short-term rentals, Airbnbs, and continually investing as LPs as well. And then eventually started my company, Brighton Capital, where now we are GPs and help investors get their money into large apartment deals.
That's phenomenal. The story definitely, I'm sure, resonates with quite a few listeners too, because that'd be a really tough call, I'm sure, for your father to make, and everything that they were going through, and then at the same time for you to take that, and then ultimately it's inspiration that propelled you to where you're at now and getting you in the industry that you're in, multifamily.
Yeah, it all worked out. Really grateful that my dad made that phone call and ended up getting into the career that I'm in or was in for a long time. And yeah, it all worked out.
It's kind of like the notion of this is happening for me, not to me.
Yeah,
If negative things come along, it might be negative for that time, but it's happening for you somehow, some way, and it's got to look at the bright side, and then whatever comes down the road, it all works out.
yeah,
Um,
exactly. It's hard to think that in the moment, but it's definitely true.
Absolutely. So you cut your teeth on real estate investing as far as single family duplexes and starting to learn the language. What pivotal moment did you have to where you knew that you needed to get into commercial real estate, the bigger stuff?
It was well, we started our first deal was in a large multifamily deal, so I knew I loved just the passive income that came from that. But when we started to get more active, and I realized where I really wanted to just focus on the large properties was we had a property, a 4 unit that was just bad timing. It was the first one we decided to buy and hold, and it had a connection in Chicago. And again, I was first starting. I would stick to the Southeast, is what we do now. But I invested in Chicago. Bad timing, ended up being right when COVID hit. We were supposed to close on a cash out refi the week that COVID kind of took over the US. Financing fell through and we got stuck with this property. And I could talk for hours on every issue we had with this thing, but it made me realize that I don't want to continue to buy small properties and want to focus on large ones, because if you have one or two people, one or two tenants that don't pay on a 4 unit, there goes all your income, or it can put you in the negative quick. Where if you have two, three, four, 10 people that don't pay on a 150 unit, it hurts. You don't like it, but it's not the quite the same impact.
Yeah, I think that the unit mix, well, the mix of income, like take advantage of some government programs if you have smaller properties, duplexes, quads, triplexes. That way you've got a almost, well, what the closest thing to get to guaranteed income. I don't know if anything's guaranteed, but it's the closest thing. But you're right. I mean, you're one tenant out. I mean, on a quad, you're 75% occupied, and that could be, not even your break even point, and then you're just, you just bought yourself another bill. But
Exactly.
economies of scale, you can, it's more resilient. You can take down 5 units, renovate them, and get those back online and do it again, and raises the rents to market. Um,
Exactly.
so you went down the path of passive, being a passive investor, and then you knew the other side was being a part of the general partnership, and there's multiple spokes on that wheel where you can have capital raisers such as yourself that are helping other investors find great deals. There's your lead sponsor, the jockey on a horse who's executing the business plan. You've got your asset manager, but the capital raiser is a part of those phone calls, whether it's monthly, weekly, or quarterly, to make sure that the asset's running in the right direction. How did you find out that that was the position that you wanted to be on the general partnership?
Yeah, it's a great question. I think it just fit my skill set. So I in the deals that we invested in as LPs, it was really to vet the operators and to really get behind the curtain. So I always ask them, hey, if we're going to invest in this deal, I want you to kind of open the curtains for us to see exactly what's going on here. And we were lucky enough to find some great partners there that did so and allowed me to see that. I also joined the Wheelbarrow Profits group that allowed me to connect with a lot of different operators, asset managers, lead sponsors, capital raisers, and I really found that my home was capital raising, kind of fit my sales skill set, just with relationship building and being able to market and attract investors to a property.
Yeah, I think it's your role is essential for someone new looking to invest in multifamily because you've got relationships built with operators that you've already have that may be tried and true, and vetted, and have gone full cycle and can do what the business plan deems that needs to be done. So when you're connecting new LPs to the deals, it's you're giving them essentially access to deals that otherwise they could have never found.
Yeah, it truly is helping them find kind of exclusive deals because they starting fresh, they're not going to know where to go. And yeah, my story and that I'm able to tell is, hey, I vetted these operators out for you. I put my money in first, put it at risk, and I saw how they operated, how they performed, and now because they've been great operators, I've now partnered with them and allow you to get in on these deals.
Yeah, and there's operators out there, well, so-called operators, but then they'll pass everything off to say a third-party property manager, but then they're not managing the property manager, and a property just tumbles. I
Yeah,
mean, you've got to have an operator that knows the fundamentals of business and has a sense of urgency baked in to know that that thing's on their shoulders. The performance is solely because of their performance. And a lot of these guys at time will tell, it's more of a passive deal for them too, and it can't be. You've got to have the sponsor making sure that that property is going to have great returns because the underwriting all made sense at the time. So
yeah.
it's
I think we
which
found I've seen a lot of operators out there that it it's kind of passive for them, or they look at it that way, but they just baked in this huge acquisition fee right out the gates where
sure.
they just take a bunch of money out at the beginning and hope that the returns pan out to their investors after that. Where, yeah, I my goal is to have long term relationships with investors, and it's in no way, shape, or form just based on an acquisition fee or anything like that.
Yeah, that's you've got one reputation, and you leave every day with that one reputation. You have to protect it, and operators that just want to go out and collect properties, they're being relied on. And it just came up in a call last week, so it's fresh in my mind because it's like opportunities that are coming down the line, but at the same time, they were trusted by other investors, and at some point, it kind of makes the good operators look bad because it's almost like a distrust, but it's not the case. It's just vetting the guys outright, making sure they are who they say they are and they can do what they say they can do. Um, but that's where you come in. You find out the nitty gritty about these guys and see what past performance was like.
Yeah, I mean, I think that's most industries too. And coming from sales, there's tons of other companies that sold solar panels, and really any sales company, there's going to be competitors or companies that didn't do it the right way and may leave a bad taste in consumers' mouths. And yeah, some operators do that in this industry, unfortunately. But yeah, if all we can do is be honest, transparent up front, and perform, kind of under promise, over deliver.
Yeah, yeah, that's good. What markets are y'all focusing on?
Mainly Southeast. So I'm in North Carolina, lived 6 years in South Carolina. So the Carolinas are focus, in Georgia. We like Florida as well, but with insurance costs and
Yeah.
other expenses going up there, we've kind of shied away from any Florida deals for the short term at least. But Carolinas and Georgia are really our main focus.
I got some underwriting over for a deal in St. Pete, and insurance is at $2,000 per unit. Like
Yeah, it's unreal.
it's incredible. it's
I mean, you got insurance companies leaving the state. It's wild.
Yeah, it makes it tough for anything to pencil out, and then everyone else gets paid, and then hopefully there's enough scraps left over to get something at the end of the day.
Right,
it's,
right.
it's incredible, but yes, Sunbelt states, Midwest. I love Midwest, where I'm out of. Steady Betty, cap rates are consistent.
Yeah,
No erratic jumps in population and job growth. It's steady increase, and I think that's what we all look for. It's just um, you know, past performance will equal future results. Of course, path of progress markets. If you can
yep,
find areas that are gentrifying, that's get in there early. Those are great too.
absolutely.
Um, what would be one of the biggest learning lessons that you've had throughout your career?
That's a good one. I'd say just, I mean, patience. There's a lot of investors I see that just want to get into real estate just to say they're in real estate. They come in and they say, "Oh, I bought a 25 unit property or a 100 plus unit property," just to say they have property, but they didn't actually underwrite it or do all the work needed. So I'd say be patient. Make sure you know what you're getting into, know your market, really have that dialed in. But I'd also say, I mean, if I could go back, I would. I really liked the way that we got into it, being our first deal, being an LP, because I was able to see how things worked first. And so, anytime I talk to an investor or someone who's wanting to get into real estate, I always recommend being an LP first and finding a good operator that you trust and and you like, and really asking them if they can open up the curtain and really give you all the information as the deal progresses.
Yeah, yeah. You see the communication coming out on an LP side, and even ways of improving it on some aspects. Communication is key. It keeps everyone a part of the deal and in the loop of how the property is performing. Um,
Definitely,
but yeah, that's a great way to start, is being a limited partner and then getting over on a GP and adding value to the team, and
definitely.
seeing what way you can fit it. What how many units are you currently involved with?
Have over 1,000 units I'm involved with. We currently have a 176 unit deal under contract in Savannah, Georgia. It's our
Nice.
newest deal.
What's the typical timeline for you all to close from LOI to close? Is it 90 days?
Yeah, usually 90 days.
What are you all seeing in the debt markets right now?
I mean they're high. We This one we're assuming the debt, so we have 4.64 rate and 7 years of IO that we're assuming. So we like where we're at on this one, but yeah, it's hard. I mean, it's hard to find deals that pencil out with the current debt.
Are you all doing a um, a secondary loan on top of the assumed? Are they letting you do a supplemental or just all equity?
Just all equity on this one.
Got it. Okay. What's the vetting like on assuming the debt right now? With I'm assuming it's a Fannie or Freddie,
Yeah, it is. It's a Freddie.
and I guess are they really strenuous on the vetting for the new sponsors, or
It they it hasn't been too bad, but the deal's contingent on us assuming the debt.
got it?
So we if we don't assume it, then the deal doesn't happen. But we're at this point we're a few weeks away from closing, and we're 95% sure it's happening.
Everything's good to go. Very cool. Yeah, debt markets are definitely high. I just had another quote. It's like it's low eights, interest only for 5 years. But man, it's like your exit plan has to be 5 years, sell or refi, and then
Yeah,
hopefully whatever that looks like, it's better than what it is now.
yeah, I know.
As long as it underwrites and it cash flows a little bit, just take the pain, increase the income and NOI, and just plan for the future. Real estate is delayed gratification all over.
Yeah, definitely. I mean, I think we're gonna have. I read an article just the other day. It was saying that I think it's almost $10 billion in uh, loans coming due here in the next or in October alone. And I think there's going to be, and the majority of those are bridge debt or floating debt
Yeah,
loans, and a lot of distressed properties. And yeah, I think even though debt is high, I think we'll be able to find some good deals here over the next 6 months.
Yeah, yeah, I totally agree. And then there's the whole office thing looming over all
Yeah.
of the debt markets too.
Oh
A
yeah.
ton of debt coming due. What would if you had to start over? What would you do different?
I think I'd start bigger, faster. I probably wouldn't mess with the duplexes or fourplexes. I think I would just dive straight into the larger multifamily deals. Just again, economies of scale. Really, you're going to deal. You have really the same amount of work on a small deal as you do as a larger one. So yeah, I'd say just start a little bigger.
I think there's a mind shift as well of I need to own it all myself versus owning it with partners and
Right.
spreading the risks, spreading the duties, and doing things together. Because there is that when you're up and coming in real estate where you want to own it all, you want control, 100% control, and it's just not scalable. It's extremely tough. I don't think there's enough time to really scale substantially on your own.
Right. Yeah, I think that was my mindset going in. I mean, I'm a business owner, kind of like to, think that I can do it all myself. And so I was like, oh, I'm going to tackle these smaller ones. But yeah, I would definitely, I mean, this is a team sport, like everybody says. And there's a lot of value in having other partners and roles so that they can all kind of stay in their lanes and you can stay in yours and do it, bring the most value in your lane.
Yeah, yeah, totally agree. And you can in this industry, you can truly afford some of the top notch talent out there because of the deals can make it make sense for everyone. And everyone, it's just funner to enjoy things together.
Yeah.
Celebrate big wins together. Go out and pop a bottle.
Yeah, yeah, it's a lot more fun when you have a team. Everyone's rooting for each other, helping each other, and you sell a deal, and by yourself, you just cash a check, and you and your wife, I guess, high five and
Yeah.
celebrate. But yeah, more fun as a group.
Yeah, absolutely. What what was been has been your best deal so far?
Uh, Early, I mean, this one is probably our most appealing and attractive deal. Actually, the one we have under contract. But as far as one that I liked or enjoyed the most, I bought a duplex early on and ended up paying cash for it in 2019 and bought it for 32.5 off market. And my realtor said, oh, I have an investor who will buy this right now from you for 80,000. You don't have to do a thing to it. I said, okay, great, let's do that. And so yeah, just sold it quick. It's like, man, I'd love to just find these deals all day long. So
It's
that's probably my favorite
it's
one.
instant. It's like whiplash, but we've
Yeah,
had a couple of those where it's like, man, if I could just do this day in and day out, it's just game over.
exactly. I don't have to lift a finger on this property. I just buy it and then sell it. That's great.
Yeah, unfortunately, the moons align on those deals, and you gotta wait.
Yeah.
That's what advice would you give somebody looking to get started in real estate?
Yeah, I'd say probably similar to earlier, just start out as an investor, a limited partner, I'd say. Uh, I mean, really, before you do that, get to know an operator, find one that you really connect with and trust, and then invest as an LP with them and ask them if they can kind of open up the curtains to you and show you what happens the whole way throughout the business plan. Have a lot of one-on-one communication with them because that is a great way to learn where you're not liable for anything. You don't even really have to put in the work, but you're getting passive income and getting tons of knowledge and education.
Yeah, yeah. What books would you recommend someone to read?
There's tons out there. I mean, most common one's probably Rich Dad Poor Dad. That's a really good one. I really like Killing the Sacred Cows. I think just
Okay.
money, mental mind shift there. That's a really good one. Yeah, there's so many. I mean, for people who are wanting to build a team and really grow their business. Who Not How is a
Yeah.
great one. So,
Yeah.
yeah.
Absolutely.
Podcasts, I would say, like this are, I mean, books are awesome, but it's also they're written at a specific time where the real estate market, if you're wanting to dive in deep on that, read those books, but also make sure you're listening to podcasts regularly so you're up to date on where the current market's at and shifts.
What would be a podcast you would recommend outside of the one that you're on right now?
And this is the only one, yeah.
Yeah.
I like Rod Cleve's podcast. Um, and yeah, there's a lot of, I mean, the Bigger Pockets for those who want to kind of get started just in real estate. There's always good. Best Ever podcast is one that I like. Yeah,
Very
Jake and
cool.
Gino. I'm part of the Wheelbarrow Profits group, so they have some good stuff on theirs.
Awesome. Is there a gold nugget you can share with any of the audience?
Um, I just say if you're gonna invest in deals as an LP, make sure you're asking a lot of questions before you get in, because as we talked about earlier on, there's lots of operators out there that may not have your best interest in mind. They're worried about their acquisition fee or just their check, and not necessarily focused on your return and making sure this is profitable for everyone involved. So just, ask a lot of questions, make sure you're doing the due diligence on the groups that you're getting involved with and investing with.
Yeah, very cool. Awesome. If someone wants to get a hold of you, how can they reach out?
Best way is just going to my website. So it's brightoncapital.io, and just click on the join the club, fill out your info, and you'll get an email where you can set up a call and hop on a call with me and we can chat.
Cool. Awesome. Anders, I truly appreciate your time today. I'll definitely be following and look forward to talking to you soon.
Appreciate it, Josh. Yeah, thanks for having me.
All right. Thank you.